Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for August 19, 2014. We're going to cover a little bit of the behavioral game theory aspects of this market and why, as traders, as investors, we fall into the trap of not understanding what's happening in front of us. The same patterns repeat themselves. The same behavioral dynamics play itself out from the lows, from the highs, and back and forth. Yet, every single time that we arrive at that particular juncture, we feel that it's just not going to stop. Now, what do I mean by that? Let me just show you visually. When we crashed and burned, let's look at the recent situation. When we crashed and burned here on the 7th of August, okay, it happened in 3 stages. It started off with a culmination of a massive drop that started on the 30th, 31st of July, and basically went straight down on the 1st of August, on a Friday. We bounced up a bit, then we came crashing down. We bounced up a bit, we came crashing down. Finally, on the 7th of August, we reversed, and we had a massive reversal day. Okay, which lasted the 7th, 8th, and then the weekend, and then of course the 11th was this prior Monday, right? Monday. Let me just make sure I'm talking about the dates right. Yes, it was Monday. So if you look at this, I picked a very simple candle charts here so everyone can kind of focus on this here. So this massive waterfall decline, massive, okay? We lost close to 1,000 points, a little less than that, 700 or so points. And then we turn. And I had predicated that this, and you can look at it, listen to my older video cast to see that I compared this to back what happened in February actually. This is back to April, but same thing. I'm sorry, this is May 20th. So let's focus on this. I'm sorry, I don't want to get distracted here. So what happens is when this type of waterfall decline happens, we never think it's going to end, but it did end. Okay, it ended here. Now, looking at the internals, looking at the positive divergences, looking at all kinds of stuff that was going on during this period, which are not shown on this chart. You can review my videos from that time to understand all that. This was somewhat predicated this was going to happen, but they never make it easy. Looking in hindsight, buying into things here at 16,300 and 600 points. 600 points in less than a week. Is or about a week or so is tremendous. So we go up here, we create a flag, and I still remember saying, hey, this is the standard consolidation flag, everything's okay, and it was. So we ramp up into into the 15th Friday, and then we have this completely manipulated, in my opinion, massive headlines, like as if it was going to be the start of World War III. I don't blame anyone. I was extremely worried because those type of extraneous black swan events can trigger off massive drops in the market. So I still had my longs, the swing longs and little bits of this and that, but I hedged it with, as you all know, with some puts. So this happens. Now you look at this type of picture here and you wonder why. And you know what? You can have a dozen conspiracy theories about why this happened. My gut feeling says very simply, somebody needed to get out of their positions. Okay? And this drop exasperated that. The massive short covering, as you can see. Let me get my drawing tool out here. So they got out. They shorted the market, or they were in a short position. They because they must have shorted around here, okay, or they might have shorted around here. They're losing money, so they said, you know what, we need to get out of Dodge. Whatever happens, this manipulated drop here, massive headlines, complete conundrum, all kinds of scary stuff, and then a massive reversal. Then comes Monday. We gap open, and here we are. It also happens to coincide with the back test of this downtrend line. So when you look at the overall picture, the question the question you have to ask yourself is, if a market is this dramatically convoluted, regardless of the fact that I always talk about pattern symmetries, as a trader, as a human being with emotions, it is very hard to go ahead and say, hey, within a matter of days we're going to be up 600 points, and within a matter of days we're going to be down 700 points. Therein lies the involvement and the infestation of algorithmic and HFT programs, buy and sell programs. Okay. My gut also tells me, and I've mentioned this a few times in the post, that some large hedge funds or some medium-sized hedge funds had institutional hedge funds had large short positions, and they were completely blown out of the water because they expected something dramatic to happen out of the Ukraine situation, where supposedly Ukraine went and blew up a whole bunch of Russian military convoy trucks and aid trucks and such, which in hindsight turns out to be somewhat of a mythical tale, with all the denials and such that happened. Very mysterious, you know. That really is something to think about. But why bother? So the bottom line is that here we are right now testing this, and we are at this juncture here, where traders and investors, my members and all of us included, we're scratching our heads and we're wondering, hey, how long can this last? Now, my more technical and more specific technical charts, which I showed clearly yesterday, show you that we are close to a short-term bottom, top. And again, we have some very large events coming up. I can assure you that the Jackson Hole event is going to be somewhat positive to the markets, but maybe, like they say, buy the rumor, sell the news. So it's possible that they're a little bit more hawkish, tough on their language regarding interest rates and what the market is expecting. But somebody in the market kind of knows what they're going to say. And when I do my reading and stuff, and a couple of the links that I post on the blog things, you can clearly see that they're going to be very soft, accommodative with their talk, and the fact that interest rates will remain low far longer than what all of what the market, what at least certain parts of the market are thinking, or the general consensus is. So saying all that, it's going to be somewhat of a positive event. Question is how the market reacts to it. My gut tells me we're going to have a small consolidation which needs to be bought right away. If you notice today, very simple charts here, that we have a red candle here. We had 11.2 million shares that were sold in the last, right at the end. If you see this here, okay, right there. We had we look at this volume spike, unheard of, right? Unheard of. They jammed the market up here, and somebody got out right there. I mean, this is unheard of. 40 million in one go, right there at 10 o'clock in the morning. And after that, we had red candles, and what can I say? I mean, this stinks of some sort of invisible hand, but then there's always invisible hand in the market. So there we are. So what I'm getting at is this behavioral game theory, that at this point, I know I feel it because I get asked this question, when is this run going to end? So this run ends, we pull back 5%. Are you going to buy it? I'm going to be in there looking at different, divergences and such. Question is, are you going to be there? So this is what happens with markets. We have a complete pattern symmetry, and it looks like we are going to go to the highs. But at this point, we're going to pull back a bit, I believe, over the next 24 hours. Wednesday pullback days might come back in play, and we move from there. Okay, let me cover some of the other charts right now.